Wow. So first off, the CPI, it's coming at a point when the markets are already getting very nervous, right? And I think this is coming from crypto, which is super interesting, right? Because usually crypto is an afterthought to stock market, Forex, and all these other things. But you have this kind of issue going on in the crypto markets where FTX is now going under. There could have been mismanagement of funds, of client funds. A lot of this type of thing is making overall nervousness in the investing public. And so when you have a CPI data that could come in hot, it definitely puts a lot of pressure on that number to be in line or better than expected. Because if it's not, if it's hot, you will see more bankruptcies in the crypto markets because the markets will get hammered, and you'll see more exposure of over leveraged, businesses. And you'll also see a stock market where you probably start to see a bigger move down take hold, and probably the June and more recent lows get taken out. Here's the S&P 500, and the S&P 500, there's no doubt that if you connect the low from March 2020, right, and you go through here, we broke it, we went back, retested, now we're kind of hovering in no man's land. So the ultimate nature here is if this CPI data comes in hot, we're basically looking at the potential for a bigger move down that takes us all the way down to this 3390, 3380 level, which is that pre-COVID February 2020 high. If it's a little bit less of an issue, there's a chance we could break above this 3,900 and maybe head back to this level around 4,120. So there's a lot. I feel like there's a lot of people that are just waiting to hear this number, and it's either going to be a massive sell-off or a massive rally. Yesterday, we saw equity markets, the stock market selling off with crypto. So when Bitcoin made a low, the stock market also made a low. But I think part of that also was a mix of people saying, listen, every month we've gotten the CPI, everyone said, oh, it'll be a little bit lower than expected, right? A little bit better. And then every month they're disappointed. So this month they're saying, all right, it's probably going to be worse. And we'll see if that's the right move here.
Gareth Soloway, President, CFO, and Chief Market Strategist at InTheMoneyStocks.com and VerifiedInvestingCrypto.com. Gareth is a pro trader with over 20 years of experience. In his early career, he dedicated himself to the study of technical charts. While trading his own capital, he created proprietary tactics like the confirmation signal, three-tail theory, river theory along with cycle analysis, and an acute ability to read sentiment and time the markets. Welcome to my channel, Time for Bitcoin.
Yeah, so as we were consolidating in this channel, so number one, it was a bearish channel, right? So ultimately the move was going to be down, and obviously we started. I was in the camp where we would at least rally to 22.5 here, this pivot high before that dump occurred. The black swan event of FTX definitely didn't allow for that. And then once that hit, I mean, it's just been down, down, down. So the fact that we've broken this low now, to me, tells me, sure, we're going to get some technical bounces, maybe a retrace of this trend line, maybe if we're really lucky, a retrace here. But I still think that you have a 12 to 13,000 high target on this market. And I hate to say it, but I'm leaning more towards a lower target now of maybe sub 10,000. Potentially worst case would be 3,500. I'm hopeful that that doesn't happen, but I think there's so many individual investors and traders now calling for 12 to 13 that it almost makes me think that, as we know, it's either not going to get there or it's going to go lower than that. And then I zone into the 10,000 level because I could see a lot of people putting stops right at 10,000, and it almost makes me think they'll flush it right below 10,000 quickly before a bottom is in. To me, it was always going to go lower, and the reason why it was going to go lower for me was that we haven't seen a recession hit in the US. We haven't seen earnings guidance come down substantially yet. We haven't heard, Apple, for instance. I mean, what's amazing about it, the Apple chart, let's take a look at that one. The Apple chart has been hovering on this trend line right here. We've hit it here, we hit it here, and now we're looking like we're gonna break. And for me, I kept on going back to the fact that even though I believe Bitcoin will eventually be that store of safety, that digital gold, in the near term, over the next 6 to 12 months, it's still a risk asset. And so if the stock market, in my book, still has 25% downside on the S&P, where we're down 40, 50%, then to me, I'd be hard pressed to say, oh, well, crypto's gonna totally avoid that carnage, right? And so for me, it's kind of like it's always gonna go down. It's just a matter of, how long does it take to bottom out? What's crazy that, regulation was like no one wanted regulation in the space, at least if you were hardcore crypto. And I kept on saying, guys, we need regulation because we need transparency. As an investor who wants to make money on Bitcoin, I need to know what the heck's going on behind the scenes. I need to know there are rules, there are audits, there are things that publicly traded companies need to do. And everyone's like, oh, that's crazy, that's going to wreck the whole crypto thing. But the bottom line is, we're seeing now that you can't trust individuals when there's no oversight, right? There's just this kind of pushing and blurring of the lines, and you have to get regulation in there. And I honestly think that when we get good regulation, that actually could be the bottom in crypto. We still have seen generally strong jobs numbers. I mean, under the hood, we're seeing a little weakening. I do think inflation data at some point is going to start to ease, right? So we're going to see lower inflation. I think that's going to give a false sense of security to the market. We'll get some sort of rally out of it. But then I do think that you start seeing that weaker economic jobs numbers really start to bite. So, end of year, early 2023. And I think there's going to be a reckoning day for the stock market where investors are all of a sudden going to be like, wait, we thought low rates or no more hikes was good, but now we're in a recession and we look to the Fed to start lowering, and the Fed turns back to us and says, hey guys, inflation's still stuck at 4%. We can't lower and create a 20% inflation point. So you have to just deal with this recession. And if you look back historically, the market in the last 20 years or so, we've never had that situation where the Fed didn't come to the rescue. And I think that's going to be the reckoning day where we get in a recession, things just continue to get slowly worse and worse, and the Fed's not able to stimulate like they used to. Crazy, man. It's exciting. I mean, if there's nothing else exciting, and I do think people have to remember that bear markets give you the best opportunities in investing, right? That's where you get things at discounts. So it's, people say, oh, bear markets stink. Well, yeah, if you're a long-term investor, it's no fun. But again, if you're someone who's looking to accumulate good quality, this is the market to do it in. So my guess is when the dust settles, it'll take us 2 to 3 years to get back there at least. I think it's going to take longer because I think all the past cycles that the Fed was printing money, right? So we're not going to have that at least for the first, I'm guessing for the first year or two. I think if things get bad enough, the Fed will start printing, which then could trigger that next move up. But I think it's going to be a little bit longer of a bear cycle than we're used to because of the lack of the Fed. And I also think that there's going to be a lot of investors that get burned, and these FTX type scenarios, Terra Luna, there's going to be people that say, hey, listen, I bought in at 55, 60,000 and I exited at 12 or 15,000 because I was panicking. I don't trust this to go back in until a bull market comes along that makes them so greedy that they finally jump back in. Case in point, COVID. COVID brought back a lot of investors in the stock market that hadn't been involved in years because they got burned in other periods. I'm actually in the camp that the S&P doesn't see a new all-time high for about 10 years at least. Wow. And the thesis there is that we're now in a period where you're not going to get the same Fed accommodation that we've had in the past. And we pulled forward so much of the gains. In fact, let me show this last chart. This is kind of what I see as the future for the US markets. And it's kind of a crappy future, but again, opportunities. There's lots of bull markets within here. But if you look at the Brazilian market and we go to the weekly chart, this run here from 2002 to 2008 is, look at the vertical nature of that and compare it to what we've seen in the US markets from 2009 to where we are now, right? So time period's almost the same, but it was pulled, so much was pulled forward in this move. And look at the Brazilian markets. We've been kind of sideways chop for now, 15 years basically, for 14 years. So I think it'll be a little sooner for the US markets, but I think investors have to realize that the Fed pulled forward so much demand and there was so much upside and valuation. Like, look at the tech sector in the .com era, and it took 10 years for the NASDAQ, I think, or maybe more than that, to get back to all-time highs. So I think we just have to be prepared. But remember, inside of those whips, there were epically big 50% moves. So there's bull markets within longer term consolidation.
Thank you for watching the video until the end. Please consider subscribing to this channel to stay updated. See you in the next episode.